Good afternoon, everyone, and welcome to another one of Avant-Garde's free educational trading webinars. We are getting ready to get started, and we are thrilled to host our guest presenter, Chris Verhaegh. Chris is with us this afternoon to talk to us all about his invaluable insights into trading silver and options on silver. Now, Chris has had a lifelong interest in precious metals starting way back in his teenage years when he was assisting his uncle at coin shows. That led him through into young adulthood, where he honed his skills trading gold and silver, and ultimately culminated with him sharing his years of experience trading with others through education via newsletters, presenting at seminars and conferences, sitting on the business advisory board at Northwest Nazarene University, even consulting for a European investment bank. With Chris's extensive experience in trading options on silver, and currently, as he notes, a lot more activity trading options on gold, Chris aims to help educate others so they can further their trading goals, hopefully aim for profit, and also mitigate risk. Chris, are you with us?
Yes, can you hear me?
I sure can. Thank you so much for being here today and for taking the time to put together this presentation for our viewers.
Always a pleasure, Natalie. You do a great job, and I hope to live up to your standards.
I'm sure this will be just lovely. Don't worry about it, Chris. And thank you, everyone who's with us live in the Zoom room today. Chris, if you are ready, you can go ahead and take screen control and pull up your presentation. And while Chris is doing that, I will just remind everyone with us live, if you have questions regarding Chris's presentation or material, please type those questions into the chat box, and I will go ahead and get those questions over to Chris at the end, time permitting. All right, Chris, I can see your presentation. I can see all things silver, so I am ready when you are.
Okay, let me just get it in the... All right, I am ready. So first off, thank you, Natalie and Avant-Garde Trading for having me. We've been doing this together a long time, albeit it's been quite some time since I've presented for them. This presentation is on all things silver, almost everything you could know about it. And I am certainly an expert on silver. I've got my quick disclaimers. This is copyrighted material. It's not meant for you to sell or resell my intellectual property. Myself and my team, we all work under the auspices of the Gold Vault Wealth Code, LLC. Gold Vault, I trade a lot more gold than I trade silver. And hopefully, if I do a good job, Natalie will let me come back and talk about gold at another time. But I wanted to get into my qualifications. So Natalie's picture is a little old of me back because we've been going together for some time. This is more accurate. I've got a scruffy beard. All joking aside, a unicorn is a mythical beast, and in a sense, when it comes to silver, I'm a mythical beast. I started working for my uncle, who was a coin dealer, as a teenager in the mid 70s. In high school, I got a job as a mail clerk at Alternative Investments. They spent a bunch of money educating me. I became an expert on counterfeits. You'd be surprised how many counterfeits you actually spend. I was a professional numismatist. And you'll see the time frame 78 to 82. That's when the gold and silver had their big boom. So I was in it when silver went to 50, when gold went to 850, and then gold went down to 250 and silver went down to $5 or $6. So I've been on the downs, I've been on the ups, the downs. We're in an up right now, and we're not near the top, in my opinion. After Alternative Investments, I worked at a private mint. And I point out here that it was after the 1980 precious metals bubble. You learn more in a down market than you do in an up market, right? Don't confuse brains and a bull market. There's a lot of people making a lot of money on silver and they think they're so smart at it. Well, guess what? Silver's making them smart because silver's getting close to $100 an ounce. And I have personal projections why I see $200 an ounce as being a possibility. Anyway, back to my being a unicorn. In the 1980s, I went to China. I was on a diplomatic visa, a guest of the Chinese government. Um, Lots of stories there. I won't tell any stories of that here, but again, I've got lots and lots of stories. I was a licensed commodity broker. I've kind of let that slip away, but so I understand um, silver, physical silver, coined silver, precious metals bubble, right, which burst, silver and gold. And I'm an extensive option trader. I've written books on options. I write option newsletters right now. So I'm I'm into I'm into this, right? And um, unfortunately, you can't maybe tell me, but go ahead and flood the chat room for Natalie. Tell me your thoughts on where gold and silver are going, or I guess for this webinar, where silver is going. I'd like when we get to the question and answer section, I'd kind of like to see what you guys were thinking. All right, so I think differently, and I teach, right? I'm here to teach you. I know some of you have no experience with options. I know some of you have no experience with silver, and I'm sure some of you have no experience with physical silver. We're just going to talk physical silver because it's silver, but we're going to focus on actually options on the ETF SLV. Now, I teach with mantras, right? I have certain mantras. One of my mantras is obvious is a function of familiarity, right? I'm very familiar with silver, so certain things are obvious to me. Some people say, oh, it's going to do this, that. And I say, yeah, you're not familiar with it enough to make those claims. So one of my mantras is, he who defines the terms wins the argument, right? My wife and I sometimes have discussions, and you know what? She always wins those arguments because she defines what we're arguing about. And so I want to get you to think. So first question, what weighs more, an ounce of feathers or an ounce of silver, right? Or an ounce of gold? What weighs more? And you say, if you think about it, well, feathers are fairly light, so gold or silver would weigh more. And the fact is, yes, that would be true. So I ask you the next question, what weighs more, a pound of feathers or a pound of silver and gold? And you'd say, well, if gold and silver, an ounce of them weigh more than an ounce of feathers, you would think that a pound of silver would weigh more than a pound of gold, but that's not the case, right? He who defines the terms wins the argument. Feathers are measured in avoirdupois, which is 16 ounces to a pound, right? 454 grams in a pound, where silver and gold are measured in troy. There's 31.1 grams in an ounce, and there's 12 ounces in a pound, right? So starting to rattle you a little bit. And this works actually better if I could have been seeing the chat as we go through. But who's the best counterfeiter in the world, right? Who's the best counterfeiter in the world? And I know some of you are just saying, well, the Federal Reserve or the U.S. Treasury, or well, the actual answer is no one knows who the world's best counterfeiter is because he's gotten away with it, right? Think about that. Anyway, enough of the fun. Let's get into it. Now, silver's a precious metal. This is a quote from Wikipedia. I'm not going to read it to you. You don't need me to read it. The key point that I see here is the symbol for the periodic table symbol for silver is AG, right? Argenta. Gold is AU. So sometimes you'll see a ticker symbol for a mining company that has the letter AG in it. That's reference to the metal silver. And again, I write about stock options as well, but I'm not going to be talking about mining companies. There's people consider mining companies a great leverage way to trade because the mining companies have a fixed cost, and if the price of silver goes up, their profit goes up. Well, I'm going to show you how to trade with far more leverage, far less risk, far more liquidity, and far more understanding, right? So going back, one of my mantras, the last share traded values all the shares in existence, right? And this is one of my mantras for the stock market, right? The last share traded values all the shares in existence. Well, you think about it for silver, right? When silver trades on the COMEX exchange, you'll see, it's going up and down all day. It doesn't go up all day every day, but it's moving. And the last trade, and certainly the last trade of the day, is a monumental thing. And all the silver in the world is theoretically based on the value of the last ounce which traded. Now, in physical silver, the price of physical silver will differ from COMEX silver, and it will differ from the ETF silver. And I have a friend of mine. He's asked me recently. He said, "Silver's going up. I want to buy some silver." And I said, "Okay, what do you want, and what do you want to pay?" So I'd like to get as close to spot as possible, right? So whoever defines the terms wins the argument. And by the way, my daughter-in-law is a second grade teacher, and this is one of her students drew a picture of a Dalmatian, right? And the Dalmatian, you could tell the eyes of the Dalmatian because of the whites of the eyes. But the term spot, right, is maybe a physical silver term. Physical silver, you have what's called a commodity delivery bar. It's 1,000-ounce poured bar. And since it's poured, it can be heavy or light. It can be 990 some odd ounces, or it could be 1,000, 1,002. It has to have a certain tolerance. So that's when you hear people talking about the price of silver, as a general rule, they're talking about the price of the commodity silver that equates into a commodity delivery bar, right? Some people will talk silver, they'll talk about silver eagles. Some will talk about silver maple leafs, 10-ounce, 100-ounce silver bars, 1-ounce rounds, right? The mint I worked at would buy scrap silver. We would refine it, purify it, and then strike mostly 1-ounce rounds, but we would also make 10-ounce and 100-ounce bars, right? Physical silver. That's one of the points of my being a unicorn, is I have so much experience with physical silver. Physical silver could also be the coins you used to spend. 1964 and earlier, the dimes, quarters, and halves were 90% silver. From 1965 to 1970, half dollars were 40% silver, right? Foreign coins were often made of silver. Canadian coins were 80% silver, right? I like trading Canadian coins because it's really easy math. There's 0.6 of an ounce for every $1 face in Canadian silver. Now, Canadian silver coins will trade at a discount to their melt value, right, to the spot, because it's only 80%. Sterling silver flatware. Sterling silver is 92.5%. And scrap. Back in the days, we used to deal with X-ray, right? X-ray scrap and photographic scrap, because prior to the digital world, you needed silver for photography, right? Now in non-physical silver, and this is kind of where we're going to focus more of our webinar, there are silver futures contracts, right? This is where me as a commodity broker, a Series 3 licensed broker, where I have a lot of experience, right? Non-physical silver would also include silver that's outside of your possession, right? If you buy silver from somebody and they store it from you, right, and they're storing other people's silver as well, you run the risk of them having a loss, whether the loss is through theft or fraud or mismanagement. I don't consider silver that you don't own as being yours, right? So some people say, well, I don't want, commodity. I don't want ETFs, right? ETF is an exchange traded fund, and the ticker for silver is SLV. I don't want that. Well, I'm going to try and convince you that you do, right? I'm going to try and convince you that you do because of how much money you make. Now, in physical silver, there's premiums. How much above melt will they charge? How much below melt will they pay you? And these premiums can go up and down. So this was a screenshot I took of a YouTube video where the person had a bid-ask spread, which is the cost of doing business. And you can see here, they would pay you $7.50 per ounce below the price of silver, $8.50 an ounce below the price of silver for a 10-ounce bar, right? Their bid is much less. They might offer, for sale a silver eagle for $10 more than what they would buy it back from you at. That's just over the top. God bless these coin dealers. I used to be one of them, right? And I talk to them all the time and say, why do you pay so low for silver? And they say, well, if the price of silver drops, I need some cushion, right? I trade silver, I trade gold all the time. I don't need a cushion and I don't charge, right? So what they're saying is, for me to make money, I got to pay you less or I got to charge you more, right? On the ticker symbol SLV, the cost of doing business is next to nothing, right? Price discovery in physical silver is basically non-existent. You can call around different coin dealers and say, what do you pay? What do you sell for? Right? The bid-ask spread is going to be wide enough to drive a truck through. But with SLV, we're going to focus on SLV. It's an ETF, trades at a stock brokerage firm. You can get live quotes. You can see charts. You can do technical analysis. Here's the chart of silver as of yesterday, right? This chart is a 3-month chart, and you should see that yesterday we closed at $84.56, having made a high of $84.78. And 3 months earlier, it was $41. So it has more than doubled in 3 months, right? This chart, I've also placed indicators over. I'm not going to talk about indicators, but you can't put indicators on physical silver. You can't go to your coin shop and figure out what the value is. A lot of people are saying silver's disappearing. There's a squeeze on shorts, right? They're using all these terms they don't know anything about, right? And so I say big boy silver is silver futures. This is real money. This is what silver trades, and everything else is a derivative of the price of silver futures. Now, some people, and I've heard this 45 years ago, and I'm hearing it today, is, well, the commodity market, paper silver has nothing to do. No, paper silver has everything to do. The value of physical silver is derived on what silver futures are. It's big boy silver, but it's also big boy silver, not only because it takes a lot of money, but it's complex. And having been a commodity broker and having passed the Series 3 exam, I'm telling you, it's complex, right? Silver futures trade at like a commodity exchange, the Chicago Mercantile Exchange, probably just down the street from where Natalie was. I used to love the Chicago Board of Trade, CBOT. They had mini silver futures contracts. They were awesome. They were fabulous. So you know what happened? The Chicago Mercantile Exchange, bought out the CBOT. And guess what? Those futures disappeared, right? If you read this yourself, you'll see that there's the margin on a futures contract is 32,500. A month ago it was 25,000. A month earlier than that, it was 20,000. So I read, certain commentary and people that don't know what they're talking about saying, oh, the, you know, the commodity exchanges are changing the rules. They're increasing the margin. They're trying to shake people out. No, they're increasing the margin because the price of silver is moving so high. Margin has to be a percentage. Otherwise, certain inexperienced traders are just going to get blown out, right? Blown out. You're not going to get blown out doing what I'm about to show you, right? Silver futures are complex, right? There's 6 delivery months. They're listed by a letter, and there's rolls back and forth. It's complex. But hey, the Chicago Merc just 2 days ago announced that they're going to start trading a 100-ounce silver futures to meet record retail demand. Now, these will not settle in silver. These will settle in cash, but they have all the complexity. They have all the complexity of the big boy futures, right? There's margin. People have heard of margin. Margin in the stock market can be a secured loan. You buy $100 worth of stock, you put up $50, your broker will loan you the other 50. Margin can be a security deposit. That's how margin is in futures. Whether you're long or short, you put up some of the money they let you trade. The best margin is the maximum risk in a vertical spread. The silver market right now is made up of foamers and FOMO. Foamers are these people that have been talking about silver for 5, 10, 15 years, and they're foaming at the mouth now that they're being proven right that silver has doubled in price. As silver has tripled in price, depending on how far back you go, it's maybe moved up 5, 10 times, 20 times in price, right? And FOMO are those that are fear of missing out. They're coming in right now, right, to try and ride this wave. They go long only. They buy silver, whether it's physical, buy the silver ETFs. Their profits come from price appreciation. And I say that foamers, it will end badly for both foamers and FOMO. It will end badly for both unless they understand put options, right? Smart silver is not silver futures, right? Smart silver is the ETF SLV. The ETF SLV, one share correlates to 1 ounce, right? So the price is slightly different, and that difference is kind of because of how futures have the interest rate, the cost to carry, the cost of insurance priced in, right? If you go look at silver futures, you will see that a March contract costs less than a July, costs less than off in the future, right? SLV doesn't have that, right? It's traded at a stock brokerage firm. And as a stock brokerage firm, many stockbrokers don't charge commissions to buy or share actual SLV. Now, I want to tell you, choosing your broker based on the commission is not the way to do it. You want the services they offer, even if it costs you a little bit of money. But anyway, SLV, one share correlates to 1 ounce. So if the ounce goes up $2, SLV should go up roughly $2. And if it goes down 3 or 4, SLV should go down 3 or 4. When you trade options, an options contract represents 100 shares. So if you buy a contract for $1 per share, you're going to tie up $100 for that contract. If you buy an option contract for 5 cents, you're going to tie up $5 for that contract. And you might say, why would anybody buy a contract for 5 cents, 10 cents, 25 cents? I'll show you that here in a little bit. Now, the fee structure, there's a bid-ask spread. I showed you the slide earlier where the coin dealer was saying, hey, we'll pay you $7, $8 an ounce below spot, right? They'll charge you, he didn't, in that screenshot, they didn't show how much he's charged, but maybe $2, $3 above. And right now they're giving you deals compared to spot. Well, because silver is so high, right? If there's this mad rush for physical silver. Why can you buy physical silver at a lower premium today than you could a year ago? In SLV, there is a cost of doing business. The bid-ask spread is in pennies. The exchange fees can be in pennies. The brokerage fees will vary, right? Trading options, you can get price projection. Here is, this was taken last week. This is an option table of implied volatility and expected moves. This is when silver or SLV, I'm going to call SLV silver, and some people might argue it's not silver, it's an ETF. Well, for practical purposes, it's the silver ETF. When I say silver from this point forward, that's what I'm talking about. Now, this was taken on Friday, January 9th after the close, and you'll see that silver options are every Monday, Wednesday, Friday, and they go out for a couple of months, and then they're on Fridays only, and then they're the third Fridays of the month, and then they'll have quarterly, the last Friday of March, June, September, and December, right? And this image here is telling you the implied volatility and telling you the expected move up or down for silver by that date in the future, right? And so if you go all the way out, you'll see that the third Friday of January 2028, which is basically 2 years from now, they're predicting silver will go up or down $45 from the 72 bucks. Guess what? $45 from 72 is about 115, right? If silver goes to 150 sooner or any time in the next 2 years, buyers of call options should make money. Well, there I introduced the concept of a call. I'm ahead of myself. But anyway, with SLV options, you can see what the market professionals are predicting or projecting the metals to move into the future, even up to 2 years into the future, right? You can't do that with physical silver. The price of physical silver is a derivative of futures, and SLV is a more closely tied derivative of futures, and it's liquid and cheap to trade. You can get more price discovery. This was an image I took after the close yesterday. You can see there's a lot of put buyers besides the call buyers, right? Well, they could be put sellers too. I'm not going to get into this slide, but I can get into this slide in great details. I want to get to the fun stuff. Silver options in your retirement account. Absolutely. Absolutely. Right? You can't easily buy silver in your IRA. It might be such that you might have to have someone else store it for you. That falls under the non-physical silver for me. If you don't have physical silver in your possession, you don't have it. But silver options can be traded in your IRA. Now, I've had someone come back to me. I called my broker, and my broker says I can't do this. So you're wrong, Chris. No, I'm not wrong. You're undereducated, and you've got a bad broker, right? Silver options can be traded in your IRA. Think about that. The smallest, if you have a tiny IRA account, you can participate, or you may participate in this bull market that we're experiencing. We're into this bull market, but today's not the high. I promise you that. I'm not allowed to promise, so I didn't promise that. I'm going to infer that. Right? When physical silver, if you bought a 100-ounce bar, you're talking somewhere of $8,000, right? It's less than 7 pounds. You think about it's like $1,000 a pound. Oh my gosh, right? SLV options is the efficient use of capital, right? The risk is limited to the debit, not like a futures account. A futures account, you have the risk of it going down, right? Going against you. With options, there's two sides to a trade, buyers and sellers. The buyer of an option has a right, the seller has an obligation. There's two types. There's call options. That's basically a bet the stock's going up. There's put options, bet that it's going down. I call this the silver Christmas call, right? These are options. This code up here says 1226. That's December 26th. Upper left, this is a $65 call. In the red box, in the middle, it says previous close 92 cents. That's $92 a contract. It opened the day after Christmas for $277 a contract. It made a high of $615 a contract. The change from Christmas Eve to the day after Christmas was 564%. 92 cents. If you had an IRA with $100, right? If you paid $100 for this and you sold it for $6 for $600, right? That's a big gain. You cannot do that in physical silver because $92 isn't going to buy it anything. The guy that sells you silver, you're not worth his time. Look to the right. The $67.50 call, it closed at 17.5 cents. Let's call it 20 cents. You buy it for 20 cents, it went up to 370. Let's say you buy it for a quarter and you sell it for $3, right? That's 12 times your money. Just buy before Christmas and go after. And now the one on the bottom, it says 3 cents to a high of $1.19. The change was 3,400%. You can't do that in physical silver, right? This is the day after Christmas. You got a big move up, and what goes up must come down, and that becomes a put spread. So these images are for 12/29, right? This is the Monday afterwards. If you would have bought a put, the 67.5 put for 49 cents previous close, it moved up to 350. The last trade was 270. That's 450%. I'd say overnight, but you can argue because it's over the weekend, right? And the screenshot on the bottom, 16 cents up to $1.35, right? Anyway, if there is timing involved here, everybody, and I'm not going to go into the timing here. That's what I can tell you about later. I'm just trying to teach you how this stuff works. Does history repeat itself? Are these one-off moves? Well, here from Friday the 9th to Monday the 12th. Monday the 12th was 4 days ago. You see this top one, the $76 call closed at 24 cents. It went up to 82 cents, or opened the next day at 82 cents, which is basically tripling overnight. And then it went up to $2.15 before pulling back and closing at $1.20, right? So depending on when you time it, I like to buy near a close, right? Because that's easier for people to follow along. Buy near the close, right? Or maybe buy near the open. And then selling's on you, certainly on you. I can help, but not in this video, right? Does history repeat? Are these one-off trades? Well, they take timing on both the entry and exit, right? Is there an easier way to enter and exit? Yes, I believe so. And the way to do that is with a vertical spread. A vertical spread is buying one option and selling another option. You're buying a right and you're selling an obligation, right? I'm going to buy the right to buy silver at $65 an ounce. That's a call option. And I'm going to sell the $70 call option. Basically, when you buy a call, you have all the price appreciation to infinity, but as high as silver is going to go, it's not going to go to infinity. So you might as well sell a call above it, obligate yourself to deliver it at a higher price than you have the right to buy it. Doing so gives you predetermined risk. It gives you a maximum return, right? But the profits are potentially geometric, right? The cost of doing business when you buy a physical, we saw on that slide before, is like $8 an ounce. Far more than the dollars per share in SLV, and certainly more when it comes to an option, right? Again, I showed you a put option that was a nickel, right? $5 a contract. Now we're going to spend a little bit more money because one thing, we're going to buy a little bit more time, right? In options, more time costs more money, or does it? Right? So here, this is screenshots from Friday, January 9th. Market was moving as I took these screenshots. You'll see on the top one, it said last 72.15 on the second screenshot. It shows 72.17. The market's moving up and down, right? This is not buying an option that expires later that same day. The top screenshot has buying a February 20th $65 call and selling a February 20th $70 call. And this spread costs $2.80, right? Your risk is $2.80. If your risk comes out, if you hold it all the way to February 20th and silver's below $65, everything's going to expire worthless, right? I'm not buying this to hold to February 20th, right? But if you held it to February 20th and silver was above 70, your right to buy at 65 is worth $5 more than your right to sell at 70. So you have a maximum risk of 280, a maximum potential value of $5. So you theoretically, you're risking 280 to make 220. That's less than 100%, so it's maybe not as exciting. This next one below, same strike prices, $65 to buy, the right to buy, and 70 the right to sell, but it's from March 20th. It costs 257, right? Maximum 250, maximum loss 257. Now here's April 17th. You see how more time is going down. It only costs 244. But if you wanted to go down even further, push your strike prices out a little bit, right? Now think about this for a second. You see here, these are taken when the silver was at $72.21. This top one, silver can go down $2 and you still double your money if you hold it all the way, right? If silver's above 70, this spread is worth $5. Now, to close it, you might have to pay a commission. You might have to pay a small slippage amount, but I would tell you that you would double your money. This trade underneath is a little bit more aggressive. It has you buying the 70 and selling the 75. You pay $1.91. Your risk is $1.91, but if it's above 75 on April 17th, this should be worth $5, right? You'd get about 2.5 times your money. Last two examples from Friday the 9th, going out to August 21st, $1.80 for the 70 and 75. And this bottom one, this one's fun. This is $10 wide. I'm buying December 80, selling December 90 for $2.31. If at December 31st of 2026, if silver SLV is above 90, this would be worth $10 and you'd make more than 4 times your money. 4 times your money. Now, the thing is, would you want to tie up money all the way to December, right? With vertical spreads, you don't have to wait. So those images were for January 9th. These images are the same spreads on January 13th, right? Silver here you can see is $78.85, $78.83. So silver's up roughly $6. And this spread that was 220 is now 358, right? That's roughly, silver's up less than 10%, but these spreads are up 20%, towards 30%. This one from 244 to 298, right? Somehow I missed taking the image of this other one. Here we went from $1.80 to 220, right? That's certainly more than 20%, 231 to 287. Buy on Friday, sell on Wednesday, right? But what if you didn't sell on Wednesday? What if you held, Tuesday? Buy on Friday, sell on Tuesday. But what if you held till Wednesday the 14th, right? The February 20 spread is up to $3.88. It was $2.80 on Friday. It's $3.88 here. That's a buck. Now understand there might be some slippage. You might have to pay a penny or two above 280, and you might get a penny or two below 388. Right now, I didn't time these perfectly. I was just building this PowerPoint. I just took slides, right? And what if someone says, "Oh, what if you had more slippage?" Okay, what if you paid $3 and you got 375? You know, hey, that's 25%, right? So here, same spreads, 244 on Friday, 298. on Tuesday, 328 on Wednesday, $1.91 I didn't take the screenshot to 280, right? $1.80 to 245, 231 to 330. These are just days, right? If you say, I'm not going to buy SLV because I want physical silver, guess what? You could have done this in your IRA just for fun. Let's say you bought 5 contracts of the one that shows here as $1.80, right? Let's say you bought 5 contracts and you invested almost $1,000, and now you can get 240, right? What would that be? Let's just say 1,200. If you can make 20% in your IRA in less than a week, right? That's what I'm talking about. That's the tip of the iceberg. I had to go fast. Natalie's probably mad at me. You're not giving any time for questions, but I'm here to answer questions if she'll allow me. If you'd like to know more, I will tell you a couple of things. First off, the irony in this presentation, I'm talking about silver, and I am an avid gold trader, right? And if you want more information, support at goldvaultwealthcode.com. That's how you get a hold of me. Natalie, hopefully I left you enough time for questions.
Oh, absolutely. Thank you so much, Chris. I'm going to ask you to leave that slide up just so people can write down your email address if they have follow-up questions. Just since inevitably people will think of questions the next day or the next week, so it's great for them to be able to reach out. I absolutely do think we should want to have you back in the future to do a presentation on, gold ETF as well, because, I think it would be great to sort of bookend, both of these. So let's definitely plan that for the future. And thank you for the wonderful information. That was a lot that you went through. So I'm sure folks will need some time to ingest it and get back to you with questions if they have any. We did have a couple of questions coming in earlier on just how do they contact you. So again, I'm going to direct everyone here, write down the contact email, support at goldvaultwealthcode.com, and reach out to Chris and his team that way. We are pushing right up against our time frame here. So if anyone has any last minute questions, please feel free to type them in the chat box now. Otherwise, as I said, reach out to Chris and his team directly, and he'd be happy to answer those for you all. In the meantime, I am going to get ready wrapping us up here because I know that was a lot of good info on your lunchtime. Chris, thank you again for putting together that presentation and for taking the time to really walk us through everything. And it's always a pleasure to host you. And I look forward to having you back again. As I said, we'll do another one where you can talk to us all about the gold.
Yeah, and again, I knew I was trying to cram a lot into a short period of time. If I would have just showed the Friday to Tuesday, that would have been exciting enough. And my PowerPoint was basically done, and I added the slides through Wednesday to show you just how much. When you think about it, if you didn't buy on Friday and it went up on Tuesday, you could have still bought on Tuesday and sold on Wednesday and made some money. There is a lot of money to be made here. It's actually easier than you think, albeit there is a skill set involved. Hopefully I didn't give you enough information to be dangerous. I would like you to reach out to me and we can talk more. But thank you for having me. Thank you for attending, or thank you for listening and watching the video presentation. I'm here to help. Natalie, as always, you are awesome.
Thank you, Chris. You know what? We did just get one quick question right here sneaking in at the end. Joseph is asking, with silver bullish, being a bullish trend right now, wouldn't it be better to sell puts? And I think you did talk about that, didn't you?
Well, the selling puts requires margin. How much money does it take for you to make how much money? These vertical spreads, they have a predefined risk, they have a predefined upside, and selling puts, you're not going to sell one on Wednesday that you're going to close on Tuesday and make 25%, right? There's a lot of margin in selling puts. If you have enough money to sell puts, you need to look at this.
Great. Thank you so much for answering that, Joseph. Hopefully that helped you out. And if not, as we said, reach out to Chris and his team, as I'm sure he'd be happy to follow up with you. We do have to wrap it up. Chris, thank you again. Thanks everyone who joined us live. and we will see you back at our next Avant-Garde educational webinar. Keep in touch and good trading to everyone. Thanks, y'all.
Bye now.